Hello traders, welcome back to another YouTube video. My name is MALONZA FX. If it's your first time to watch my YouTube videos, if you are a returning subscriber, thank you so much for the support. And I'm going straight to the point. We just finished our morning analysis as we do every day from 9:30 to around 10 a.m. That is morning analysis before London session begins. And immediately after, we begin another session from 10 a.m. to around 11 a.m. Now, that's a physical session where learners come to our main office here at Westlands, the Oval on the 5th floor. And from exactly 3 p.m. to 4 p.m., we have an online class. For the guys who could not make it for the physical class at 10 a.m., you can join the online session from 3 p.m. to 4 p.m. each and every single day. So it's very simple to sign up for these classes. Check on the video description. I'll put the link to create an account with HFM Kenya, and any other detail I'll leave it on the video description. And lastly, if you're watching this video, kindly do subscribe and share with a friend, because this is what we'll be doing each and every single day from January to December. See you in the live classes.
Okay, so what is transpiring this morning when we look at different asset classes? Let's first of all begin with the United States dollar, specifically the dollar index. The dollar index has been weakening. Look at the dollar index. This was last week's setup. For those who are following, we had a very nice setup last week. We were looking to short the dollar index if it comes down below 38.2% level. It was trading at around 103. And as of this morning, the dollar index is trading at 101.90. So from 103 to 101.90. When we looked at the dollar index, it was right there at around 102. So this was a very good opportunity if someone was considering selling the dollar index. So the index has been slipping towards 102, currently trading at 101. Obviously, as expectations rise for a Federal Reserve rate cut due to signs of a slowing economy. And Federal Reserve Bank speakers have noted some potential risks, including the risks of credit card delinquencies. That is, people who have credit card, they're looking as if they're not going to pay. The economy is, suspected to be slowing down. But traders are now waiting, of course, for the chair of the bank, who will be making a speech at a symposium in a place known as Jackson Hole. This symposium basically comprises it's a meeting. It's a meeting where we have bankers meeting, policymakers meeting, and traders will be waiting to see which direction does the Federal Reserve want to take interest rates. Okay, can you guys hear me? Am I audible? Please let me know if I am audible.
Yes.
Okay, I think if I'm not audible, you need to check your... Someone said I'm not audible. If I'm not audible, please just make sure that you check your audio settings if I am not audible. I even have my video on now. Okay, so as I was stating earlier, how the dollar index is trading. The dollar index basically gauges the strength of the dollar against seven major currency pairs, and of course the dollar index has been selling off, as we can all see that super mighty downtrend that we have been having. It's good to understand what is driving price, what is the catalyst behind the downtrend, what is the catalyst behind this downtrend, so that when you're monitoring markets, when you're following markets, you can be able to know or to tell when the catalyst is no longer there, and therefore the market can be poised for a reversal, let's say for a reversal from this downtrend, switching from the downtrend and to an uptrend. So these are the key levels to watch on the dollar index. I'm just putting those key levels on my charts right now. We have resistance there at 102.62. We currently have the dollar index experiencing support at what's the current price right now? I'm just going to look at the closing prices at the moment. Yes, so critical support has been penetrated. That was critical support at 101.98. Or you can say 102 flat. 102 flat, 101, 101.98, 102 flat. Critical support has been cracked. The dollar index has cracked below that critical level of support. We'll see whether the dollar index will still have downside momentum pushing it. Whether there'll still be more sellers becoming aggressive and pushing the dollar downwards, depending on how sentiment is going to unfold. But the bigger picture is the traders are looking for traders are anticipating the Reserve Bank of the United States will cut interest rates. So you might see the dollar breaking down below 101.98, near-term resistance at 102.62. Those can be good areas to consider having a stop loss if someone is going to short the dollar. Let's see whether we'll have a significant pullback. If we look at the Fibonacci levels, let's look at the Fib levels, see whether we'll have whether we can anticipate a significant pullback up to which particular level. So a significant pullback all the way to the 50% level right here at 102.51 or 102.5. Let's see how this how this dollar index will trade today. But if the economic calendar continues being, if there is nothing on the economic calendar, then we don't anticipate to see a lot of price action, rather than price just consolidating or coiling around, trading around 101.89 and 102.0. So that's how the dollar index is trading. The other asset to pay attention to is crude oil. Okay, crude oil prices have been dipping and crude oil remains under pressure. I remember I mentioned crude oil in our last market brief, or was it at the brief or the post? There's a post I put out on Twitter on crude oil. We had a very nice bounce. Price experienced support around here at 75, then bounced back up to 76. So that was a good move. It was not a very aggressive move, but a 10-point move roughly there. So that was a very, very good move. And as of this morning, the crude oil prices, of course, continue remaining under pressure. As you can see, crude oil prices sold off late on Friday, currently trading at 75.02. That's where crude oil is finding its support levels. So why has crude oil been selling off? This is simply because there has been concerns in China that demand has been weakening in China, but these crude oil prices might find support at around the 50% level at 74.89 or 61.8, simply due to tensions escalating in the Middle East, and of course a potential interest rate cut by the Federal Reserve Bank in the US, which will start in September. Low interest rates help support oil prices or help support commodity prices, simply because the dollar will be selling off. So if crude oil is going to bounce back up, if these concerns regarding weakening demand in China are going to be ignored by market participants, or if the macroeconomic data coming out of China is going to be positive, we should see crude oil bouncing back up to 75 and 75.75 all the way to 76. If that is not the case, concerns continue to linger, and maybe a peace deal is brokered between the warring parties in the Middle East, that is Israel and Palestine, Israel and Hamas to be specific. If anything is brokered, then of course this will no longer, the conflict there will no longer pose a threat to crude oil supply lines, and we should continue seeing the prices of crude oil falling down. So we are closely monitoring developments in the Middle East, closely monitoring economic data in China. 50% level there, 74.86. This region continues to be a very reliable level of support. So it's either we break below or we rally back up, depending on how market sentiment will be unfolding as the week begins. The other asset to look at, of course, is gold. Okay, gold traded at an all-time highs. I remember we were looking at gold on Friday, discussed how to trade around gold. We had some long positions on, that is some buys on gold. And as of this morning, gold prices have pulled back, have retraced from around 2509, 2510 thereabouts, currently trading at 2502. But 2500, hovering above 2500, gold is trading at at fresh new highs, fresh all-time highs. This is because investors are flocking into this safe haven asset as they obviously assess the next move that the Federal Reserve is going to make regarding interest rates. Low interest rates usually encourage gold prices to move up. And furthermore, there's a lot of geopolitical tensions, the war in the Middle East, the war between Russia and Ukraine, all that serves to prop up the prices of gold. So gold, we are fundamentally bullish on gold, and if we were to see a significant pullback, maybe if these tensions ease, things cool down, if we should see a significant pullback in gold prices, maybe wait to see whether gold prices will come back to around 2475, 2480, thereabouts. That can be a significant levels to watch if we anticipate pullbacks. So you can see that level, for example, at 2480, perfect confluence with the 38.2% level, and also this key level of resistance. Okay, this zone of resistance here and also around here, and then we have that level. So it's a key level to watch, but fundamentally we remain bullish on gold. The other thing, the stock market in the United States, if we look at US 500 has basically picked up from last month's lows. We have seen the stock market rally, moving up very, very aggressively, up for a number of days. This is how many days? Basically, the whole of last week, the stock market rallied up. The reason why the stock market is moving up is simply because investors are anticipating the central bank will decrease or cut down on the cost of borrowing come September. We also had positive retail sales data last week. Also employment claims have declined, and all this boosted stock prices. If we look at individual shares like Amazon, individual shares like Google, Apple, all those shares rose and are rallying higher. So this looks like a very bullish scenario, bullish picture for the stock market, unless otherwise. So let's see this pullback from here up to here. Let's see what level are we trading at. Yes, you can see clearly we broke above the 61.8% level, and any break above the 61.8 level usually shows a higher possibility of prices continuing to rally up. We might have a pullback coming down, maybe a retracement all the way to 61.8. That is at around 54.93 or 55.14 thereabouts. This should be a good area of support. Okay, that entire zone should provide a good area of support if the stock market, the US 500, should continue moving up. So it's important to watch the stock market. You can get trading opportunities because this market tends to trend very, very nicely. It's a little bit volatile, but when it starts trending, it trends in very smooth, clean trends. So the other assets, of course, currencies. Let us look at the GBP USD. Okay, the pound, the British pound, is touching a 1 month high right now. It has been rallying. So this was our trade on Friday. It was a very good trade with the British pound. I hope you guys took it. Okay, so we had the British pound rallying from, I don't know what's happening to this thing here. Yes, we had the British pound rallying. Let me just clean this up. Yes, there we go. So we had the British pound moving up. Yes, oh, we have the British pound moving up from so we had the British pound moving up. We had the British pound moving up from yeah. So when we were looking at the British pound as of Friday in the morning, not the British pound. Yeah, the British pound. Sorry, apologies. The British pound. We were trading at, I want to see the time. That's why I'm flicking my charts like this. Yes, we looked at it in the morning. In the morning, we, at around 9:10 thereabouts, we were trading at 128.85. And all indications were very bullish for the British pound, and it proceeded to move all the way to 58 pips. Currently, we are trading at 72 pips. So it moved from 128.74 thereabouts, jumped up almost 60 pips. 60 pips if you are trading one standard lot. So if you are trading one standard lot, the value of one pip is $10. So a move of 60 pips, that nets you 60 pips times 10, that is $600. So it was a very nice, clean move by the with the British pound. Okay, the reason behind these moves in the British pound is simply because we had good macroeconomic data coming out of the United Kingdom last week, and also traders are trying to price in 25 basis point interest rate cut by the Bank of England, not as they were pricing in earlier. Earlier, they were pricing in a 50 basis point rate cut by the Bank of England, but the bet has reduced to 25 basis points. And also, there are way lower odds that the Central Bank of England, that's the Bank of England, is going to cut interest rates. The odds are slightly low simply because inflation has surged in the United Kingdom, especially services inflation in the services sector. Okay, let's try to unmute ourselves. I was just trying to mute some. Okay, and finally, apologies guys for those who are joining us at right now. We usually start this early at 9:30. So if you're joining us right now, yes, for those who are joining us late, sorry, we are about to finish, but you can still follow what we have discussed or talked about on YouTube. So finally, guys, we are going to look at the euro dollar. The euro dollar is also another interesting currency pair to watch. As you can see, we were looking at the euro dollar last week, and we even had long positions on the euro dollar. As you can see, those positions are still actively running right there. So we bought at this area here. Now price action has surged 47 points. That is almost 50 pips. Okay, 50 pips from our entry. Okay, entry at around the 50% level. That was last week on Friday. So quickly, let's see. The euro dollar. Very bullish case for the euro dollar. The euro dollar has essentially been moving up simply because the dollar is fundamentally weak. So the dollar being fundamentally weak because market participants or traders are anticipating interest rate cuts. This has made the euro to strengthen, obviously, and the dollar to weaken. You can see this very nice bullish move. So it's either we look at this from two angles. We're going to look at this from two angles. So we have that high there, anticipating support to come in probably at 110 flat, 110 flat, or at around 110.12, 110 flat or 110.12, anticipating those if price is going to retrace lower, those are key levels of support to pay attention to. If that is not going to be the case, assuming price continues to surge higher, obviously we'd anticipate a break above this key level of resistance, right here. Let me just highlight it. So we have this key level here. So we have this key level of resistance right here. This key level right here. Key level of resistance right there. So if I anticipate the prices of gold to continue, the prices of euro dollar to continue surging higher, this is the dance that I would anticipate. So I'll basically anticipate euro dollar to break above this level, maybe consolidate a little bit and continue swinging higher. So I would anticipate such kind of a move. So if such kind of a move happens, I know very well if I have my entry around here, then I ought to have my stop loss below this key level of resistance, okay, which will obviously be translated, which will obviously transition to support. Not so obvious, but potentially transition to support. So having a key stop loss around here. So let me just magnify this chart a little bit. Okay, so if we magnify this chart, see this level right here, this area here, this price here. So the price here, this key level of support at 102. 110.21. So 110.21, having a stop loss below that level shouldn't be an unrealistic level to have your stop loss. If, okay, there's a disclaimer to this. If we see price action, trying to look for a drawing tool here. Where are the drawing tools? Oops. If price action moves to this point here. So if we see price action surging, yes, I've seen it. I've seen what I'm looking for. So if we see price action essentially, breaking above this key level here. Okay. Oops. So yeah, if we see price action breaking above the key level here, breaking above, maybe probably coming back, finding support slightly and surging up, okay? If that is the kind of dance that we anticipate. So watching that level to see whether we'll have a technical breakout, and consequently, if we have a technical breakout upon entry, this around 102.14, 110.14. Is it 110? Sorry, 110.21 should be a good area to consider having a stop loss. Alternatively, we can anticipate a sell-off up to that particular level. We might have price consolidating slightly and then bouncing back up, breaking above this level, or alternatively, price breaching below 110.21. That is price coming, selling off, and then breaching below that level for another leg lower. But the market is anticipating the United States to cut interest rates, weakening the United States dollar, and that will have a positive impact on the euro, all other factors being held constant, obviously. So with that, that's it for today's market wrap or morning market crunch where the opportunities lie, unless there are any questions or unless you guys would like us to analyze some FX pairs or any assets that you want us to look at. Okay, any asset that you want us to look at, you can just tell us. But without forgetting, let me not forget to mention this. As of this morning, one of the currency pairs that are quite strong, quite strong as of this morning, the New Zealand dollar. If you look at the New Zealand dollar has been rallying very strongly this morning. You can look at this bar right here. Let's look at the 1 hour time frame, for instance. Since the whole of last week entering into this week, this was on Friday, you can see how the New Zealand dollar has essentially been rallying. So the New Zealand dollar, couple of scenarios to anticipate here. If the dollar continues to weaken, couple of scenarios to anticipate here. If we look at the New Zealand dollar, we have a couple of scenarios to anticipate. See, it's a couple of scenarios that we can anticipate. So that level at 60.84, key level of resistance at 60.84. Okay, so we can have our level here. We can have our fib levels right there. Oops, sorry about that. Right here. Wait to see whether this asset will retrace all the way to 60.35, okay? 60.35 and 60.43 thereabouts, or even better at 60.50, around number level, 60.50, 0.6050 thereabouts, okay, at 38.2 level, okay? We might have that pullback all the way to that level. That should provide someone with an opportunity to enter, to take a low risk trade. You know, a good entry, a perfect entry is a low risk entry. If you're entering into a position, you should ask yourself, are you getting into a low risk entry? I mean, do you have a low risk entry? Low risk entry means that you get to risk few pips, because the setup allows you to do that. So we can anticipate that and see whether price action will rally from there after it drops all the way down. If that scenario fails to happen, and let's say price action goes ahead and breaks above this key level where we are at right now at 60.83, this is a very key resistance level, okay? This one here. Very key resistance level. Wait to see whether price will take out this level. Okay, that price will take out that level, another leg up, and then a pullback, a possible pullback, and then another leg up, providing one with an opportunity for a good low risk entry around here at 60.91. 60.91 thereabouts. So I have 60.91 and 60.91, 60.83, 60.80s, 80s there, and 90s, 60.80, 60.90s, if we are to anticipate the Kiwi dollar continuing to rally up. Okay, so for those who are saying that there is no sound, that they cannot hear me, I believe the problem is on their end. For us here, we are loud and clear. Okay, we have dollar yen. We have the dollar versus the Japanese yen. So I'm gonna just go to it very quickly. USD JPY. Yes, the dollar yen has been selling off as of this morning. We had the dollar yen selling off, continues to sell off. Even when you look at this asset, if you look at the larger picture, that is the daily time frame, you can see we encountered a very good key level of resistance Why am I calling it a key level of resistance? A moment. Simply calling it a key level of resistance. If we pull our fib from here to here, we can see it hit the 50% level, sold off. This is even when the dollar index was selling off. The dollar yen sold off, currently finding support at 143.31, thereabouts, trading at 145.69. So it will be interesting to see whether we'll have the dollar yen breaking below this key level here, giving us a good opportunity for a short trade, and also having the setup being a low risk entry setup, because I can short here, have my stop loss either above 23.6 or above 38.2, depending on my risk. Okay, depending on my risk. Target 142.11, 141.51. Okay, 141.51, 141.50, targeting those levels. So that's the dollar yen. Those are the key levels to pay attention to. Another asset or currency pair. Another asset or currency pair is GJ, the British pound versus the Japanese yen. The British pound versus the Japanese yen. Also, same picture here. We can see the British pound basically encountered a very nice key level of resistance right there. Let me just clean this chart up. Encountered a very nice key level of resistance. You know, showing the same pattern like the dollar yen. This is simply because the yen has been quite strong against the other currencies. It has been strong against the dollar. It is also strong against the British pound. That's why we see this sell-off. British pound hit the 61.8% level, currently trading below the 50% level, providing a low-risk entry opportunity. Okay, an area where we can have a stop loss at around 190.78, right? 190.78 if we were to short the British pound versus the Japanese yen. Anyway, if one is to consider going long, we have support there coming in at 187.63. See whether price action will break above 189.96. That break above this level here, probably price consolidating and breaking above that level, moving above 61.8. This is one scenario to look at it. And the other scenario is obviously a consolidation and then a drop below that 38.2% level, then pull back up there, and then price selling off. Okay, so it depends with how you're going to look at it. But most importantly, my advice to you, or my recommendation, if you are trading, one of the things that you do as a trader, if you have a trading strategy, is to anticipate. Okay, to anticipate the move, not to just jump in. If I say I'm anticipating that price action will probably move up, I'm anticipating a scenario whereby I need to see price breaking above that 50% level. That is above 189.96. Breaking above 189.96 for me to consider, okay, fine. If it has broken above that level, I can place my entry, and I know I have a low risk. It's a low risk entry because I can have my stop loss below that 50% level. If we're talking about moving below, it will be wise to anticipate a break below 38.2 before I make any move or I execute any trades. So you have to anticipate, okay? You have to anticipate, not just take the signal or the alert as it comes, as it is, like buy now, sell now. No, don't do that. Just anticipate, okay? Anticipate. For those who don't know how to anticipate, please make sure that you join our trading strategy classes or our master classes. In our master classes, we discuss all those tactics around trading and different trading strategies, and essentially how to analyze the markets so that you can be effective when it comes to taking these opportunities or spotting these trading opportunities. As of now, I will have to stop this at this particular point, because right now we are transitioning to the physical class. The physical class is about to start here at our premises, HFM, along Jalaram Road. You can visit us if you wish to get to know more about the physical classes. But the physical classes usually begin from 10:30. Earliest is 10, but latest is 10:30. We do it for an hour or 30 minutes. We break things down from beginner. Guys, it's a master class, so we're breaking things down from beginner, intermediate, all the way to advanced. What I'll recommend to all of you, please just make sure that you educate yourself on matters trading even before you attend any class or any so-called training. Make sure you just have some working knowledge. Show some interest, okay, guys, because at the end of the day, you are the one who is trading on your own. You are the one who is running the business. It's your business, it's your capital, and of course, it is you who is taking the risk. So watch out for the market updates that I'm going to send more updates, maybe more charts. We're going to we're going to do it together with Malonza. Send more charts, send more trading ideas, more market commentary, so that you can always be in tune with the markets. The hallmark of a good trader is being in tune with the financial markets, knowing what's happening, what's going on, which assets are moving. And it's very easy to get all that information. You can get it on our trading platforms. You can get it on our website. You just have to focus, and everything will be good. And also remember, don't trade if you really don't have the knowledge or the technical know-how of how to go about trading. You're going to trade badly. You're not going to manage your risk well, or your trading psychology, you're not going to manage it well. And then when you blow your account, you will start crying and say, trading is a scam. Okay. It's not a scam. It's because you are trading from a point of zero knowledge. Get knowledge first, empower yourself first before you take any risks. And also remember, take calculated risks, look for low risk entries, and also take risks that you can afford. Use money that you can afford to lose. Don't use your rent money to trade. Okay. So thank you, guys. It's very wonderful having you guys here. Thank you for the responses. It's really encouraging. And let's meet tomorrow for this. And maybe we shall be doing a recap in the evening. We'll see how it goes. So thank you, guys. Have a good time. Cheers.